Hey, Bulls and Bears, we're back with another dose of you know what. Let's get right into it. Could this be the final nail in the coffin for the U.S. consumer? Well, things are starting to look pretty dire. First, let's talk about the CPI number, and then after that, we're going to talk about the pretty sad or devastating state here of the U.S. consumer. First of all, CPI rose 0.4% from August to September. Now, you think that's not a lot. That's not a yearly number. That's just month over month. So 0.4%, you annualize that, we're just under 6% CPI price inflation. And that's just the official number. We know that the real number outside of that, what most people have to pay just to survive, is way above that, right? So this is not good news at all. At a time when you see such enormous U.S. debt, and we're going to go over some of the numbers here. First of all, we have conflicts expanding. We have talks of more war and expansion of wars, more nations getting involved. And, we told you again this was going to happen. We told you that when the economic collapse begins, things like this tend to happen. Call it what you want. Some people say it's some dark forces behind the scenes that are making this happen. Other people say it's just the state of the world and that these things just happen because of the situation that most people are in financially. I'll let you decide that here. It doesn't really apply to what we talk about on this channel. On this channel, we want to be prepared for what's coming. And I think what's coming is more of the same, but it's going to get a lot worse, right? So it's kind of similar to what we talk about here, but it's not similar because getting worse means it's changing, but it's changing for the worse, right? So here we go. Here's the state of the U.S. consumer right now, and what people have to pay with here. Get my new blue blockers on here. I didn't mean to buy such a dark pair. Actually, these are a little darker than my other ones. Anyways, the average payment on a new home is now $2,900 a month. The average house is now renting for $1,900 a month, so just under $2,000. The average new car payment comes in at $740 a month, and this is put out by John Rubino, by the way. The average student loan payment, $500 a month. Back to the cars. The used car price, the average payment's $530 a month. Average for a gallon of gasoline, $4. Come out here to California, looking at about $5.60 to $6. Average household credit card balance is $7,300. Wow. So obviously, most people are not going to pay that off in full each month. So what does that mean? They're carrying a balance from month to month. 20+% interest rate, unless you've got an introductory rate or a 0% promo rate for maybe 12 or 18 months, which is typical if you get a promo rate. But if you're outside of those promo rates, you're looking at 20 something percent a month. And with the average balance of 7,300, you're not paying that off in full. So we don't have much further. I mean, again, this could be the last nail in the coffin here for the consumer. There was going to be this big fight against inflation with the higher rates. And what are we seeing? We're still seeing prices go up. Now, of course, when you look at a lot of the corporate media, they're going to say things are coming down. What they mean is the rate of inflation is coming down. So it's still going up. It's just not going up as fast as previous. But when you look at previous, go back, last year, it was like 7-8%. So no, it's not as bad as it was back then, but prices aren't coming down, folks. The average household will have zero excess savings by the end of this quarter. Right now, excess savings doesn't mean that they're broke. I know a lot of people, a lot of influencers were putting that out there. Everybody's going to be broke. They're going to have no money. No, what that is excess savings. That means after the bills are paid, and then after the cushion that you're supposed to have, which is not much, barely anything, then the excess savings is gone. People will still have some savings, but not what they consider excess savings. So not good at all. And this article also that I'm reading this from points out here, this is not a world where broke consumers with growing credit card balances drive positive growth into the indefinite future, right? When you look at the consumer, the way that the consumer props up the economy, with the economy reliant on consumers going further into debt, with the pyramid scheme that it is, right? In a pyramid scheme, you always have to have new money coming in, new investors coming in the pyramid scheme of the economy, not just the U.S., but globally, you'll have to have new debt being accumulated all the time. Otherwise, the whole thing falls apart, right? And that's why when we see asset bubbles inflated, it's usually not too long after that when you see the bottom drop out and you see an economic downturn, right? So people are saying no, it's not a recession. It is. Bottom line is, this is going to be something that we've never seen before. Probably something even worse than that. People are talking about Great Depression 2.0. I think we're already in Great Depression 2.0 when you look at the number of people that depend on rescue programs and payouts, right? And speaking of rescue programs and payouts, California doing something very interesting here. It really shouldn't be a surprise. More programs for renters. Governor here signs a tenant bill to allow or to force lower security deposits, and prevent more evictions. So what do we say right here on this channel? We said these programs that were implemented in 2020, they're not going to ever go away. Cities have experimented with trying to get rid of them, but we see what's happened recently in some cities, like LA, a big spike in evictions already. And it just started just in the last couple months because I believe if I'm remembering correctly, the protections were in place until the end of August, right? So we've only seen one full month. And even in this first full month, we see a big surge in evictions. And it's forecasted that if all the people that are behind on rent in LA actually end up getting evicted, that you could see homelessness spike by 500%. But that's the forecast. Now, I don't think that's going to happen because I think more protections are going to be rolled out. And of course, I was right because today, Los Angeles Times, was this today? This was yesterday, October 11th. California governor signed several new laws to protect tenants against evictions and high rent costs, including a bill that caps how much people pay upfront for security deposits. It's also capping the annual rent increase at 5% plus inflation. So that's still a lot, right? Your rent goes up 5% a year plus even more because of inflation. That's still pretty big increases, and most consumers just can't handle that. All right, so let's get down to some other news here. Let's go ahead and transition a little bit here. And this next bit of news, I know a lot of you are going to be pretty sad about this. So make your sad faces, right? Sad face. Wall Street bonuses may drop by 16% this year as higher rates threaten businesses. So a lot of people in banking are feeling the pinch, especially if you rely on a big pipeline of loans or whatever financial services you offer. With people buried under so much debt and with so little to invest, it only makes sense that these bonuses would drop. This is out of the Post, by the way. Wall Street bonuses could fall 16% this year as interest rates, possibly staying higher for longer, threatens performance of financial companies, according to the New York State Comptroller. The drop, however, would be less than the sharp last year's 26% decline that shrank bonuses to $176,700 on average. Wow, those are some nice Wall Street bonuses. We have this two-tier society. We have Wall Street making a lot of money, and the top 10% included. But below that, a lot of people are not doing so well, as we see the gap between the rich and the poor become wider and wider. So pretty much you have the mega rich, and then ultimately the bottom 90% is going to be the mega poor. And when you look at the middle class, it's shrinking. So not much in between if this continues to play out. Now, hopefully we'll see some sort of correction where the cost of living comes down, where we see, and when we say the word correction, we mean prices correcting, the cost of living correcting. Housing needs to come down. Rent needs to come down. The cost of automobiles needs to come down. And when you see all those things come down, then you see the overall cost of living come down. Because think about this, a commercial building where a business runs out of, if the rent is enormous, they're going to have to make that up in profit. So they're going to have to charge more for the goods and services that they offer. So if we see deflation, if we see commercial prices come down, commercial buildings and properties, which they should, because we're seeing big defaults right now in commercial real estate. We've talked about that here. It's not as bad as financial crisis yet, but it's getting there. Commercial property vacancies and delinquencies on the loans for the property owners are starting to spike pretty big. So that's going to mean lower prices going forward. Then hopefully businesses can move into these office spaces with lower overhead and not have to charge so much, right? So it's all part of deflation. It's all part of lower cost of living. None of this should be looked at as a bad or negative thing. If you're invested in these things, and of course, then it's bad. But for most consumers, just looking for lower cost of living, this is a good thing. Corrections are good things. Prices coming down, they're good things. Now, of course, they're going to say that's a negative because, oh, look at all this equity the homeowners lost. Look at all the money people lost in the stock market. Well, if you have cash, then you can go in and buy these things cheaper now. Stocks, autos, homes. It's a good thing. That's why it's good to have cash. That's why I've always advocated for being a balanced financially prepared. Be balanced in your financial preparations. Have cash because deflation, it could happen. Other people say don't have much cash because inflation is the only thing that's going to happen, right? I'm not that positive in either direction. My crystal ball is not that clear on it, right? So if you're clear on it, if you know 100% either way, please let me know down in comments what the secret formula is. Maybe you're one of those people. We'll be looking for your comment down below here on this channel. I do try to read the comments as often as possible, so thank you for everyone's input. Also, thank you to the super thanks people that helped out here. We're going to talk about you at the end. Thank you very much. Dow Jones closed 150 today on Thursday, October 12th. Stock market finally starting to price in some economic reality and the whole war expanding. And it's just going to get worse. We're going to see a lot more countries get involved. And like I talked about in our last report, it's coming to U.S. soil. It's coming to U.S. soil. It's going to happen here in the U.S. We're going to see social unrest and conflicts like you can imagine because a lot of the things that are happening in other parts of the world, we have some people here in the U.S. that are going to be making things happen. That's all I can say about that. I can't really get too deep into that here, on this platform. LA Times here. Wall Street falls after the Fed warns rates may stay higher for longer. Well, that's been in the cards. A lot of investors are hoping for rate cuts. Can you imagine rate cuts at this point with the cost of living where it is? So obviously Wall Street has no regard for Main Street, right? It's all about the bonuses. It's all about how much money they can make. No one's looking out for the greater good. No one's looking out for society as a whole or society in general. It's the greed economy. And, some people say that's just business. You want to make as much money as possible. That's the American way. That's capitalism. That's business. Other people say it enriches a few and buries the many. Well, it definitely buries people in debt. You can still file bankruptcy. Luckily, there is a way out. So it's not the end of the world if you reach the end of your financial rope, because you do have the rescue at the end of the day called bankruptcy, where you discharge the debt. What they need to do is allow student loan debt to get discharged as well. It's interesting, though, you can discharge certain types of debt, and for the most part, you can't discharge student loan debt. Now, some people argue against that. They say, no, you shouldn't be able to discharge student loan debt. You borrow the money, you need to pay it back. Well, what about people borrowing money and running up credit cards to buy booze and throw parties and take vacations? You can discharge that debt, but you can't discharge someone trying to do the honest thing, is get an education. Now, a lot of people are getting the wrong type of education, and a lot of people are getting an education that's really irrelevant, right? How's about an education in something hands-on, like heating and cooling repair people? How's about more auto, not mechanics? Somebody reminded me the proper term for mechanics is technicians, automobile technicians. How's about that? How's about stuff that people really actually need in their life, right? We need lower prices, so we need more auto technicians. We need more repair people. We need more roofers, more contractors, construction people. Things that we all have to pay for, right? We need all these things at lower costs. So anyway, that's my rant on the whole state of the U.S. education system. Oil coming in just under $84. Predictions out there that it's going to 150 as these conflicts over across the world. But right now over in the Middle East, Israel, those are going to expand is what it looks like here. So we're going to have to keep an eye on it here, keep an eye on our wallets, figure out, where this thing's headed to best position ourselves, right? So I hope you guys like this report here. We're going to go ahead and wrap it up here. I'm going to say see ya. And what do you guys think about the CPI number? 0.4% just from month to month. We're looking at under 6% a year if that continues. Not good. Is this the nail in the coffin? How much further do we have until collapse? Please let me know. Please let me know what you think down below. For for now, we're going to wrap it up here, and we'll see. Hopefully, we'll see everybody very, very soon. Want to give a thanks out here to the super thanks donations. Thank you very, very much to the following individual. We have Maria Rivero. Thank you so much, long-term supporter of this channel. Thank you tremendously. We've got here Mike S. Thank you, Mike S. Christopher Quinn. Haven't seen you in a while. Good to see you back here, Christopher. Thank you. Josh Martin, thank you very much. Rose Black, thank you very much for your support. And TSA Braden, thank you very much. And DJ Jojo, thank you very much for your support. Love all of you. Thanks for being here. Please hit that like button. It does help our channel here. If you don't like to donate, of course, no problem at all. But I appreciate those of you that can. But please leave a like. Click that like button. And you can't like or comment if you're not signed in. So if you're not signed in, please sign in for me, please, and leave that thumbs up. Leave a comment if you want, but thumbs up really helps. Thanks everybody for being here. As always, big love. Keep stacking. Talk to you very soon. Till next time. Bye.